Welcome back to another Tuesday and Vetted VA Live, where we get together each week with a group of vetted VA experts, both on the real estate and mortgage side. And we go through a topic of interest to you, the vetted VA members, and try and get you the answers and information, some of the behind the scenes information, so that you can make better and more informed decisions. Last week, we went through the pre-approval process. If you missed that and you're getting ready to go out and be pre-approved, getting ready to shop for homes, go back and check it out. We went through why it's needed, what it should look like, what you should be prepared for, the type of documentation that you need to have ready, and just how to make that process go as smoothly as possible so that you are ready to make that buying process go nice and easily. So if you're interested, go back and check that out. Today, we're shifting gears, but along the same lines. We're going to talk about how to shop for interest rates, compare interest rates among different lenders, and we're going to talk about shopping for a lender themselves. The rate is important, but the person and company that you're working with is also important. So along those lines, I've got three guests, and we actually have four. She'll be popping in here in just a second. As always, remember, although this is a topic we're covering today, we're open to answering any questions. I'll be watching the comments here. So any questions related to home buying, financing, refinancing, selling, anything that we can do to get you answers. If you have a question, pop it in the comments and we will absolutely get to it. So with that, why don't we start here on the top row with me? We have Sean Hammond with U Mortgage out of Tampa, Florida. Why don't you give us a brief little intro, Sean, of how you got into the mortgage business and how you found your way to vetted VA?
Yeah, absolutely. I appreciate it. Thanks everybody for jumping on. So my name is Sean Hammond. I've been in the mortgage industry for about 22 years. Have had different experiences and different opportunities within the mortgage industry, and I've been in the vetted VA community for about 2 years now. I'm a Marine Corps veteran myself, and just really excited to get back to the veteran community, educate them on the products that they have available to them, and really just create homeowners and educate during the process. So appreciate you having me on.
Awesome. Thanks for your service and thanks for joining us, both your service in the service and to veterans here as a part of vetted VA. Also now on the top row, now that we have Tina back in, I've got Donald Gomez. He's a realtor with Remax Community Valley in Ogden, Utah. How about yourself, Donald? How did you find your way into the real estate industry and how did you find your way here to helping veterans in vetted VA?
Yeah, so my name's Donald Gomez from Ogden, like you had said. There's a Hill Air Force Base right here in Clearfield, Utah. So I was actually working up on base, painting aircraft, and just seeing people coming and going, hearing the stories. I didn't really like the stories I was hearing, so I wanted to think of a way I can give back and make the process a lot smoother and easier for the vets. So I got my real estate license. And then ever since, I just kind of flooded the base with business cards and stuff and been just helping vets ever since come and go. It's been awesome. I don't know if you guys know Jimmy Hobson, but he was the one that told me about vetted VA. He really believes in it and helping veterans. So that's kind of how I was introduced and met with Nathan and Brandy and Chris and did all the stuff that was required and got in.
Absolutely, and that's a common story. A lot of us in vetted VA knew someone, heard about the group, learned a little bit more about it, and ended up here as moderators, as vetted experts. Tyler Goff is joining us here from Sussex, New Jersey with GTG Financial. Why don't you tell us a little bit about yourself and your journey here to vetted VA?
Yeah, awesome. Thanks for having us again. And I got in the mortgage industry about 4 years ago. I've been around the industry for about 11 years. My mother owns a brokerage. I kind of been around that since I was about 14 years old, doing clerical work, admin work, moving my way up to processing and then into originating. And I met Chris back in 2018 when I had really started diving into the industry. I don't have any service connections or any related service at all in the military, but I do have, any which way you look inside my family roots, we have connections. So being able to provide, give back to veterans, support veterans, and just kind of the stories I've heard, seen, and experienced within my family was a big part of why I do what I do and giving back within this community and getting involved in this community.
Perfect. And last but not least, Tina, we lost you there for a second, but we have Tina Brumon also here in California with me in Ventura, California with eMortgage Home Loans. Give us a little bit of your background and how you got here.
Yeah, so I'm a loan officer in the Central Coast area of California. I got into lending because both of my cousins do it. And I ran across Vetted VA, and like the others, really the mission really resonated with me. I really serve because my father died way too young. He was a military vet out of Vietnam, and after him and my mom divorced, he struggled with home ownership. All the while, he had this gold nugget of a VA benefit, and he ended up renting. And I saw him really not use that benefit. And when he died too early, this is my way of kind of remembering him in service of his memory, and really making sure that people don't not use their VA entitlement benefit, because it is an earned entitlement, and every opportunity should be given for these folks to buy a home.
That's awesome. I love hearing everyone's background and reason and why we're here to serve the veterans in the group. And it's funny, hearing Tina, you, Tyler, you, family background. My mom was a processor and transitioned her way into being an originator. My grandfather was a realtor. My cousin was a processor. I wanted to go overseas and play basketball and ended up hurting my knee. And my dad got tired of me sitting on the couch waiting for it to heal up. And that was the way I found my way into the mortgage business. So it's funny how family kind of helps everyone get here. And then with the family ties to the VA, a lot of us found our way here as well. So another thing that you guys had mentioned in those intros is part of the reason of why Christopher Griffith had started this group of seeing veterans with an earned benefit. That's one of the best benefits that you get for serving your country in the military, being treated poorly, if not outright abused throughout the process, either being told you can't get an offer accepted with VA financing, or being charged too much for their VA financing, or working with someone that just didn't understand or know the program. So again, today we're going to talk about how to shop for a lender to make sure that you're working with someone that has your best interest at heart, understands the VA loan program, and is able to help you get dialed in. And within the context of that, also what is important about interest rate and making sure that you're getting a good and fair deal when you're working with a realtor and a lender. So with that, why don't we start with, and I want to ask Donald, our realtor partner here, why is it important for one of your clients to shop for a lender? And before you answer that, I found it kind of interesting. It depends on who you look at, but more than 50% of home buyers will go with the first lender that they talk to. Now, self-servingly, I know if they talk to me, they don't need to talk to anyone else. And I'm sure if they talk to Sean or Tina or Tyler, same thing. They're in good hands and it's not going to be a problem. But most of the people that come to me with horror stories or late in the game asking us to fix stuff, they went with the first person and they didn't have any point of comparison. So, Donald, why is it important for a home buyer to shop when they're in the lending process? We've got you on mute, Donald.
There's a couple of different reasons. Just to name one, the interest rate may vary, so that may affect their purchasing power. The closing cost of the company may vary. So one company may be charging you a lot more for closing costs than another, and that's going to affect your purchasing power or how much closing costs you'll need. So that's one of the main reasons I like to ask them to get a second opinion, or tell them, if they have. So yeah.
And Sean, as a military veteran, we're talking specifically about the VA loan program. What is unique about the VA loan program that possibly makes it even more important to shop for a lender than if you just want a standard conventional 20% down loan?
So, everything depends really on the veteran's scenario. So, we have, when you talk about the VA loan, there's a lot of people that can take advantage of this product, whether they're active duty. There's some, potentially some restrictions or things that we would have to consider as somebody moving around the country, timelines and things like that. There's veterans that are obviously after service. They may have disability ratings or income that's not traditional from a normal loan. So talking with somebody that is versed on all the products and the benefits that they can use and the different nuances of the VA loan is important. And then you have, obviously just a veteran that's out and in a regular job position. You're going to have, the same type of income, but you're going to have different nuances. Debt to income ratios may vary in different scenarios. I think the biggest thing when a veteran is shopping around is, I think as an industry as a whole, I think the misconception is that the VA is providing the rate. And I think Donald had kind of mentioned this, that individual lenders set the margins and set the products that they want to operate and the margins that they want to operate on those loans. One of the areas that's been identified is that the VA loans have it's been abused. There's an opportunity to take advantage of what I think are the best people in America. So shopping around allows you to really analyze and see, for your particular scenario, your credit score, your income, all of those things, what is the best option for you. So really shopping around and making sure that you're working with somebody that has your best interest at heart and also is well versed on the product. So that's one of the biggest things. Is any originator is legally allowed to sell the VA loan. It does not mean that they're knowledgeable on the VA loan. So there's, you're entrusting one of the largest financial decisions that you can make. Interest rate is a portion of that decision, but also the confidence and just the understanding of the product. You're going to have a much better experience with somebody that is well versed on it.
Absolutely. And you hit it on some really important things there. A VA loan can be as simple as any other loan. If we have someone who is no longer active duty, they have a salaried job and an 800 credit score, and they make a ton of money and they're getting a relatively small loan, that can be one of the easiest loans that we do. On the flip side, it can massively increase the complexity. You could have someone who is separating in 2 months and they have an offer letter. You could have someone who is undergoing their disability rating. There's any number of things that can make it more complex, besides talking about active duty, getting transferred to a new base, family, moving around. So a VA loan truly can be one of the easiest loans out there, and it can be one of the most complicated ones. And if you don't have experience with the program, it can be really hard and difficult to know what the difference is. So Tina, you had mentioned that you had family that was a veteran, your father, and wasn't able to take advantage of his benefit. If you had someone, if you weren't in the business and you were coaching a home buyer, how does someone go about finding a good lender? It sounds easy. We live in the internet age where you can Google or Yelp just about anything. But what are some of the best ways for someone to get connected with a good lender who has their best interests at heart?
I would actually go to somebody like Donald, actually. I would go to a real estate agent that was active on base, that he himself, as a real estate agent, handled a lot of transactions, because then likely Donald has seen a lot of different lenders handling those VA loans. And Donald's probably the best source to give at least some input and guidance. That's not always to say that every real estate agent would be the best source for a referral to a vetted VA, or for any experienced VA loan officer, but someone who was a real estate agent that you knew was active in doing base placements when people were PCSing or moving in these, time crunches where duty stations are being moved. That type of a real estate agent, which is going to be somebody that's probably located near a base of some sort, they're probably going to be your best source for that type of a referral. And if you can't find somebody like that, then just go through that same thinking process. Like, is there a VFW in your area, right? Is there another active veterans group? Go to that group maybe in your smaller community or area and ask some questions there. Word of mouth referral and somebody with some experience with that lender is probably the best way to find them.
Perfect. So Tyler, in addition to maybe going to your realtor, using some of the online sources, I had a client this week that called and I could not figure out how he got here. Asked him and he says, well, you have the best Google reviews in your town. So I called the top two. I talked to both of you. I like both of you. You have better terms. So he did his shopping that way. So besides the online stuff, besides talking to your realtor, what are some additional ways of finding a good and reputable lender?
I definitely think just reaching out within your community. We're going to have a lot of members, a lot of clientele, a lot of clients that are PCSing or that are separating, and they have resources available, whether it's on base or whether it's someone that has gone through a similar situation that they have gone through. And a big word of mouth. If you're not going to be going to a realtor, if you're not going to be using the online resources, reaching out within your community and discussing with people who have shared similar instances of what you're going through, whether it be PCSing or whether it be just moving or EASing, separating, and hey, who did you use? What was your experience? And could you make a couple recommendations as to why you would recommend those people? If we stick to realtors and stick to the online resources, and we're all going to Google the same thing, VA loan in my location, we're going to find out that the nationwide and the most dominant paying consumer or clientele interfacing companies are going to be what we see most. And that's what's most dominant out there. And unless we adjust or adapt kind of what we're searching and what our criteria is or what we're asking or who we're talking to, we're all going to be directed to the same place and kind of the same resource, which, there's tons of other independent mortgage brokers and tons of other resources out there that's going to provide major benefits to the shopping and to what this whole, context of looking for and shopping for lenders is going to take. So word of mouth for experiences, reaching out to other members within your squad, your platoon, your community that have gone through similar instances, and just adapting to the standard searches that we're going to be searching. If we do use the internet, maybe don't, utilize the first main three words, VA mortgage loan, my location, mortgage broker, local mortgage broker, those types of things to adapt to what we would pull in as our data for what we're researching during this process.
I love the direction you went with that, because my brain just always thinks when I search for something, if it's a service provider, if I want a plumber, I'm not looking at the organic results. I am actually looking at the local businesses. But for us on the mortgage side, especially if you put that VA qualifier in there, you're going to get 2 or 3 big national providers. And there's pros and there's cons to it. It is, again, one of the reasons why Vetted VA exists. So why don't we talk about that a little bit? We're talking about, when I say shop for a lender, I'm thinking specifically get to Sean, get to Tina, get to Tyler, get to Josh. But if you Google, a lot of it pops to a company and you'll end up with just a call center. So we have 3 or 4 different types of lenders that can do VA loans, or if you're not getting a VA loan, any type of financing. Tyler had mentioned independent mortgage brokers. There's local mortgage banks, meaning they're not a bank where you can go and open a checking account, but they make mortgage loans. There are the actual big banks, Chase, Wells Fargo, those types of places. Credit unions would kind of be included in that. And then we have the big national call centers, the places that you can't watch a sporting event without seeing 900 of their signs and seeing 10,000 commercials about their wonderful J.D. Power ratings. Sean, why don't you tell us a little bit about the differences of those? I mean, the reality is you probably can get a good loan from all of them. Even one of the biggest call centers that specializes with VA loans and has a fairly bad reputation. We had a realtor on here she said, I've had 2 or 3 really good experiences with them. If you get to the right team and the right person, it can go very smoothly and they can do a great job for your veteran. It's not common, but it can happen. So certainly not to say that there is one right channel to go to, but what are some of the differences between those different channels that we just mentioned?
Sure. And absolutely, the easiest way that I like to look at this, and it's really basically 3 different channels. So typically you have your mortgage broker, which has a variety of lenders that they work with, correspondent type channel where they are aggregating potentially to multiple lenders. And then you do have your what we'll call big box, very similar to shopping at 3 different stores. 3 different stores typically have 3 different expenses and how they pay their employees and how they run their model. As you can imagine, the more signage you have in different locations, the more expensive it is to originate a file in general. So when you correlate that to understanding to the local market, now whether that be a local correspondent lender or a local broker, they're traditionally going to be running and advertising to a much smaller area. So their expense to acquire the customer is typically lower, which means that savings is being passed on to the client. When you start to go to the big box store, sports teams are not free. race cars are not free. All of these things are not free. And ultimately, those costs get spread over all of their clients. So in general, I would say that the larger locations are running at a higher margin because they have more overhead, and which in turn is a more expensive event for the client. So when I encourage individuals to not only shop around. Now maybe they want to, or they had a friend that had a great experience with one of those larger lenders. That's fine, but again, we need to compare against other lenders. So at least get a minimum of 2 quotes or potentially 3 quotes, including that local lender, whether it be correspondent or broker, to really understand and make sure that you're getting the best deal for yourself, because you want to compare different models. And again, I always focus back on interest rate and costs are probably half of the equation. The other portion is the confidence level you have in the individual that you're speaking to. How much knowledge does that person have about the product? Again, I'm going through the home buying process myself. I'm in the process of selling and buying a home. I've been doing this for years, and I have some anxiety over the process. Sort of like, oh my goodness, like this, all of these moving parts. So when I look at anybody going through this, they want to make sure that they're working with somebody that is working on their same side of the table. They're an advocate for them in the process, not just presenting a program and moving forward. So I'd encourage you to shop around and get at least 1 to 2 other quotes off of what you would have that first shopping experience with.
Absolutely. What I like to say is 2 should prevent you from getting horribly taken advantage of, because for the most part, reputable lenders are in a narrow range. There are plenty of outliers that aren't that big of an outlier that if you make one call, you can get with one of them. And especially on a VA loan, you can be a 0.5% or a full percent in interest rate above the market and 1 or 2% in fees easily. If you make 2 calls, I think it's pretty unlikely that you would find your way to 2 high-cost lenders like that. But the more time you have, the better off you are. Or if you don't click or feel great with either one of the first 2, by all means, keep going until you get a comfort level, both with what the fee structure looks like and the person that you're going to be working with. So as we transition through the conversation here, I want to direct this next question both to Donald from the real estate side and Tina here on the mortgage side. Again, if you're advising someone to go out and go through this process of shopping for a loan and a lender, Donald, from the realtor's perspective, what questions do you want your clients asking of prospective lenders they're considering working with?
Just how familiar the lender is with the VA loan, if they primarily focus on them or do them a lot, because again, if you're going with something offline or a big lender like that, they may not know about the local grants that some of the local lenders may know about. Like I know here in Utah, there's a $2,500 grant that's available, but it's only limited. It's only available for a certain amount of time. So you may miss out on something like that talking to somebody that's in a whole nother state or doesn't even know nothing about the local county that you're in, So that's one big thing that they should be asking and knowing about all the grants and the stuff that's they're entitled to and the benefits. And then also how their process works, if they have an underwriter that they can talk to directly or whatnot versus being clear across somewhere else and how that works.
At what point, Donald, do you want to talk to the lender? I mean, obviously you want to respect the buyer's choice and going through whatever their process is in selecting a lender. But at a certain point, it is really important that you, the realtor, are able to work successfully and productively with that loan officer. At what point do you kind of step in and start having conversations and working with the chosen lender that your buyer picks?
I like to, as soon as I talk to the buyer and they tell me they have a lender or whatnot, I like to get the pre-approval letter, get their information, call, introduce myself, just give all my contact info and see if there's anything I could do to help with the process, and obviously build a little bit of rapport with them and get to know them and see how their process works if it's not someone that I previously already used.
Absolutely. In the internet age, I'm only licensed in California. Some of you guys are probably licensed in multiple states, but we frequently work with realtors that we don't work with on a regular basis. And that conversation, once you have decided you're going to work with me as a lender, it is really important that we connect with your realtor, get on the same page, and they're going to ask me how I like to work. I'm going to ask them how they like to work, and we're going to make sure that we're working together to serve you. The gentleman that I talked about about, who found me through a Google review earlier this week. Obviously, he's not going to make an introduction to the realtor until he decides who he's going to work with. So about 2 days later, he calls me back and says, hey, I'd like you to reach out to Janelle. We're going to be making an offer. She has some questions. And Sunday morning, we jumped on a call for about 15, 20 minutes and got on the same page with everything. So that's really an important part of that process. Tina, anything that you would add as a lender, and you're advising someone on talking and having a conversation with 1, 2, 3 different lenders? What questions should they be asking to make sure they're in good hands?
I think some other things that are not necessarily specific to the loan or the interest rate that are really important are communication style, right? Are you going to work with one person directly through the loan process, or are you going to have a whole bunch of different people connecting with you and talking to you? Are you going to have a loan officer that has a clear understanding of the market so that you're giving guidance beyond just quoting an interest rate, but you know what that market is doing? I live in a fairly bougie part of California. Even though we may start seeing some home price declines throughout the US, they're not likely to hit my vacation rental market as heavily as other markets. So my guidance to that client in terms of what to expect for market appreciation or unit availability or things like that, the guidance that we local lenders or independent brokers offer is a different kind of financial guidance that goes quite beyond just talking about the interest rate. And I think once you start having a conversation with a couple different lenders, that distinction is very clear, especially if you're comparing a good independent broker or a good independent mortgage loan originator that's heavily entrenched in their market, knowing market conditions, market trends, who the agents are in the market, all these other nuanced things, has an understanding of best financial guidance in telling you what may be some alternative way to see how much down you put if you are going to put some money down, right? How to best utilize your money with relation to the house and if there's any improvements. A VA loan doesn't require any down payment, but sometimes in some of the high price markets, VA borrowers are bringing forth some down payment, and some of the guidance that we're providing is beyond just rate and closing costs as a comparison. It's also guidance of how much should I borrow? How much should I put down to get my offer accepted? Things like that. Those strategies beyond just the interest rate are very impactful, especially in certain hard to operate in markets.
Absolutely. So we really have started this conversation with shopping for a lender, and that's where I think you should start with as well. And I don't think someone should just start by calling and saying, what's your rate? Have the conversation the way we're talking about. Talk to a couple different lenders, see who you have a comfort level with. At a certain point, that conversation is going to turn to what is the interest rate. Hey, cool, Sean, sounds like I like you and would be in good hands. What do your terms look like? So with that, Tyler, why don't you tell us your thoughts on where interest rate fits into this decision? It's obviously important. It leads to the affordability. You're going to make that payment every month. Although most people will refinance, you're going to have it for 3, 5, 10 years. Tell us where rate fits in your mind.
In my mind, it is probably one of the most important things that a client is focusing on. So as we try to connect with the clients that are shopping, and as they are shopping, we know that that's what their focus is. We know that they're going to be looking for who has the lowest rate. Well, we all know that we all have the lowest rate. We all offer the best service. We all can close the fastest. We all can do all the things that every other lender is going to say as well too. So in my mind, where the rate comes into conversation is, after I find out your story, after I find out your why, after I find out your because, after I find out what's going on, you may encounter somebody who is PCSing and is, living in a place right now where it's a little more expensive with what their LES is paying them and whatever else. They might be in a completely different situation where the rate is factoring. And when it comes to when you're shopping, talking with and advising them, hey, this is how much you can buy, and this is how much you might want to put down and how much you want to bring to the table to make your housing payment with this interest rate more affordable monthly for what you're going to be signing up for 30 years. Interest rate is probably one of the most important things and what clients are facing when they are speaking with us and what is going to be coming up front forward. But we can't, in my objective opinion, we can't lead with interest rate. You're going to get clients and you're going to have those shopping that are just interest rate focused. And that's what they're going to be. Those are going to be the people that have 20% down. They're looking for the best rate, the best closing costs, what's going to cost the least amount for me, what's my least amount of acquisition cost. But when we're looking at veterans specifically and those who are using 0% down, who are using their full benefit of no money, no low cost, no money down, the interest rate is going to be what the interest rate is for the market, for what our margins are set at, for what we're offering. I can offer the same interest rate that somebody else can offer. I can offer the same interest rate that you got from your online lender. Mine might be better, but if you're needing to close in 2 weeks because you have a PCS coming up and the other lender dropped the ball, is that something that I can do? That 0.5% or that 0.25% that's saving you $2,000-$3,000 might not be that important to you. So once I find and understand why you reached out to me and what the purpose behind your call is and why you're shopping with me, why you're talking with me, and what is behind, hey, what's your interest rate? That's when the interest rate is going to come into play for my conversation with my client, because I can sit here and sell rate to any client that shops me. I can sit here and say, hey, here's my loan estimate. We got your application. Here's my loan estimate. Here's my rate. Go shop with 2 other lenders. Come back and tell me you find someone that beat me. I'll get skinny. I'll cut margins and I'll get you a better deal. I can sit here and do that. But what is that going to benefit in the long run if I'm just going to cut margins and going to cut rate and going to offer rate and talk rate when I don't know why that client is speaking to me? So for me, it comes in after the story, after the application, after what's going on, because then I can understand, if you're shopping rate, you're shopping rate. You're going to talk to 2-3 other lenders. You're going to have a couple high cost lenders like we discussed about, and you're going to see that what I have to offer. And even if I don't take the time to vet the client, vet the prospect, get to know the because, I might offer them a rate that is higher than what they were already offered, that is something that is out of their price range, and they might just take that loan application, the fee sheet, or the loan estimate and the fee sheet, and I won't ever hear from them again because of what they're seeing.
So we're going to go into that. I have some snippets of a loan estimate here so that we can walk through it. We're going to go through that in a little bit more detail, but just on the subject of rate, paradoxically, the people that I see get themselves in the worst situations are the ones that want to call, what's your rate? What's your rate? What's your rate? I'm working with this guy. He has the best rate. Sean, what are some things that go into that rate being quoted that if someone just reaches out and asks for your rate and you throw a rate at them, that could be wrong, that it could be manipulative, the information that you're giving them, that you could make yourself look better than a higher rate that may actually better? Why don't you kind of walk through for a potential borrower some of the ways that can lead them astray, just asking people right off the bat, what's their interest rate?
Yeah, absolutely. Great question. And I think this is a conversation that should happen with every client as they call in, even if you're just delivering your rate, explaining the parameters. So basically interest rate on the majority of loans are driven by FICO score, debt to income ratios, and your LTV. So the one great proponent and component of the VA loan is the LTV is not necessarily a factor in the transaction, but the lender still wants to make sure that you have the ability to repay. So your debt to income ratio and your FICO score, your past history on paying other large debts is factored into that, and they're called risk factors. So explaining to the consumer, regardless if you're the best or the worst or the middle interest rate that they received, really just explaining to the veteran why you're presenting this, if there's any adjustments to the interest rate and why those adjustments are there. And again, it's an educational type process of how to educate the veteran on what's available to them and the parameters of why it's available. So really the biggest factors, when in a VA loan is FICO score is the biggest factor, and potentially payment history and things like that if we're looking at manual underwrites and other kind of attributes that fall into the transaction.
So those are the factors that it takes to determine an accurate quote versus just saying, hey, VA loan, here's my rate today. There are some things that A borrower, B borrower, C borrower may not get the same rates for the same loan program, even with the same down payment on any given day. Tina, why don't you walk us through the impact of points? What are points? How does it impact the interest rate, and why is that critically important when you're getting a rate quote, that you know exactly what points and any additional lender fees would be included in that?
Okay, I want to make one more point though. Can we come back to that one in 1 minute?
Absolutely.
One thing I wanted to say, because I think Sean and Tyler and I are all kind of saying it, but we're not directly saying it. As mortgage brokers, we have a whole bunch of different lenders that we can place your loan with, right? And kind of what Tyler said, it's depending on your certain scenario. One lender might be super fast, right? They're going to be a very fast lender we can take a really tight escrow period to. Another lender might be really great because they have better underwriting skills and they can calculate self-employment borrower if we had a gap of employment or some other situation. So some of this difference also that we're talking about in this last question that we were just discussing is also that difference is not so much what we charge or anything like that, or even necessarily nuance that's consumer driven. It may also be circumstantial where we're needing to go to a lender that's slightly more expensive because their time to close is so much faster and their process is so much smoother and quicker. Or maybe we need a little bit longer of an escrow period because we know we're going to have to work through verification of employment wrinkles that we're already anticipating. Some of that nuance and placement with lender is also where independent brokers can offer an advantage that maybe a headset jockey or a direct big box lender does not have. And that's that nuance where Sean, Tyler, and I are all kind of coming up with a little bit of a different answer, but saying the same thing. But we didn't talk specifically about, there is that other factor, which is, where do we place this loan in terms of the investor to underwrite it?
Absolutely. You know, and one of the things, kind of just going one layer further, if we have a lender who has the absolute best rates and terms on the planet, but they only want the best of the best borrowers, we only want 740 credit scores, and we take 45 days to underwrite them, many people will voluntarily choose not to do that. And many of the big box lenders take the VA program that is probably the most flexible in terms of what can be done, and they paint a real narrow box around it. And they say, we only want a maximum 45% debt to income ratio, even though VA does not require that. We will only take a minimum 640 credit score, even though VA will go way below that. We will only take loans that have an automated approval, even though many lenders will allow a manual underwrite that Sean talked about. So all of those things that you guys were talking about, there's 50 different reasons why a loan needs to go one direction. It is a benefit that brokers can have, just having a bigger, a more wide open box by having multiple lenders. We have the lender that may not have the greatest rates, but they're willing to take on additional risk. Like you said, fast lenders, all that fun stuff. So it was a great point. So kind of circling back to where we were going, we know now which lender you want to go with. It's a manual underwrite, it's a 580 credit score. Now you're going to look and quote that borrower. What other things does that or any other borrower need to be aware of besides just the interest rate before they can determine who has the best loan for them?
So I guess it would be how much there is going to be in box A fees. So box A on the loan estimate, there are different boxes or categories. Oh, good. That's perfect timing. There's different boxes or categories where charges are bundled together. Box A are fees that the lender, the originating lender, the loan officer has some control over. They can include points. They can include underwriting fees. Box A is where the variability in loan to loan comparison is going to come in mainly. The reason why I say that is because third-party fees, title, escrow, appraisal if it's needed, those are going to be charged at the fee structure that's originally charged by the third-party vendor. So those are just pulled through as is fees, and they're pretty uniform across the marketplace. Box A fees, though, not everyone charges the same. You may have a lender that's charging you points. Points can be used in two ways. One, they can be used as additional compensation for the loan originator, but they can also be used as a way to lower your interest rate and lower the payment, or increase the interest rate and offer a credit to offset some of your closing costs. So points can kind of mean two things, and you really need to understand what they mean in your particular loan scenario, because they could mean additional loan officer compensation, or they could be points that are affecting your interest rate either higher or lower.
Perfect. Now, I want to go through a couple things, and you guys feel free to give feedback on this. Kind of a way that I like to compare it is that if you call me and you call Sean and you call Tyler and you call Tina tomorrow, you ask us to quote you a VA loan, and we all send you a loan estimate. The only thing on a purchase transaction you need to concern yourself with is box A. As Tina said, all of the other boxes are basically dictated by the transaction. They're not dictated by the lender. So a lot of times we, at our company, our box A will be empty. Borrower chooses not to pay any points. We don't have a processing fee. We don't have an admin fee. And it's easy that I could say, we have no fees in box A, and that could be great, but it could lead to a higher interest rate. One of them might quote $2,000 in box A, but 1/4% lower interest rate. The only way to really compare the four offers between us is to know box A total. Like, I don't even care. Like, this example here says 1/4 point of loan amount and points, an application fee and underwriting fee. I don't care. What does it cost? Consider it all points, which is basically a yield adjuster. The more you pay, the lower that rate should go. So if we look at it, we have four interest rates and we have four totals in box A, and we're weighing what's the best option for you. It is really, really critical that you ask this information. I don't necessarily believe when you're calling around and comparing rates that you need to get a loan estimate, but you need to know what is going to be in box A. And the best example I have, about 2 years ago, it's almost 3 years ago now, my business partner, Scott, talked to a veteran. He's buying a home. We go through it. We get it all set up. We get him locked on a Friday. Rates had got worse on Monday. And he calls us and he tells us, hey, you guys, I really love you guys. It was wonderful working with you. But my boss helped me. He sent me to the lender he worked with, and I got a better quote. Just so happened it was the biggest lender in the United States of America, known for not being real honest or straightforward and truthful about what is in box A. So we said, no problem. We had the VA case number. It had to be transferred before that loan could be changed. We said, we'll do it immediately. Just shoot us over this loan estimate so we can make sure what you're comparing. So we look at it, and it was a higher interest rate and more in box A fees, and magically had a lower monthly payment. So we said, sir, how can this be a better deal for you when box A you're paying more and your interest rate is higher? And he says, well, look at it. My payment's $200 lower per month. This won't mean anything to anyone outside of California. We have a fun thing called Prop 13, where if someone owns a home for 50 years, they're paying really low taxes. As soon as you buy that house, you're going to get assessed at your amount. He happened to be buying a little old lady's house. Her taxes were $115 a month. His were going to be $365. And that lender was choosing to quote the lower taxes there. So it's important, just logically, he could have known by comparing a higher interest rate and more in fees in box A that he wasn't actually getting a better deal, even though they were quoting a lower monthly payment. So I think this box A is really important. I kind of want to open it up to all of you guys and tell us, until a borrower completes an application, when a borrower completes an application, we have 3 days to get that loan estimate out to them when they're going to see box A. But a lot of times in this shopping process, people are calling. They're not going to take the time and apply with all four of us. At what point do you give them a loan estimate? And if at this point you don't give them a loan estimate at all, what other documentation are you giving them that will give them that box A information that we're talking about? Sean, you want to kick us off?
Yeah, absolutely. So this is, I would say, probably more prevalent than ever because interest rates have been volatile in recent months. So people are definitely shopping around and being more vigilant. You can provide either a you're going to provide a loan estimate, which is the most formal. That's when you're documenting, typically when your interest rate is being locked, or if you're after that 3-day or within that 3-day period, or you just get a fee worksheet, which is going to be accurate as long as you have confidence in the person that is providing you that information. Is going to be accurate, the same information, but it's a less formal document. This is typically prior to the application, prior to triggering the TRID event that needs to be a full disclosure. But you can get a fee worksheet that will go through all of your fees. When we talk about Box A, the biggest thing is, and I think Josh made a great point, all of those fees are lumped together. Whether you're paying points or you're paying an underwriting fee or any upfront charge, it should all be viewed the same way, as those are the charges associated with getting that interest rate and getting that loan. So when you're comparing, really totaling all of those charges together, and the interest rate that you're getting is really what you as a family, as an originator, or as a borrower would look at and say, what is the best scenario for my particular case? Because I know sometimes I have borrowers that are adamant that they want the lowest interest rate. Lowest interest rate typically is going to have a charge or going to have points associated with getting that. I always preface the conversation of saying, here's my opinion, but at the same time, I'm not paying the mortgage for the next 30 years. This is a choice that you're making for yourself, but really acquiring and looking at the cost of that loan, when you're looking at the fees, it's how quickly are those costs recouped over the lower interest rates, the reduced payment, because you're buying down that interest rate, basically divided into the savings, gives you a recoup period for that scenario. So if the client is looking at it, particularly within the veteran community, when you look at people that are maybe PCSing every 2, 3, 4 years, so they know they're going to be in and out of a property, looking at that recoupment period, if they choose to sell and not become a landlord, if they choose to sell down the road, they may have a lower monthly payment initially, but a higher cost when they go to end up selling that home. So again, speaking to somebody that's comfortable to really analyze the data, to be able to provide that, really an analysis to the situation, so they can provide the most professional information to the decision-making process, I think is the biggest thing when you're working with a mortgage company. So I know I went a little off topic there, but I think it's really kind of poignant to that Box A conversation. Is it's more than just the number; it's the number plus the analysis.
1,000%. And like I want to follow up on what you're saying. Generally, if I don't have an application, I'm going to give someone a verbal, and if they want it in writing, they're going to get a fee worksheet, just like you said. But when I give them that fee worksheet, which is less formal but easier generally to read for the borrower, and they're going to get the important things. What does a borrower care about? What's my interest rate? What's my payment? How much cash do I have to have at closing? What can I afford? And we can give you that with the fee worksheet. What can you afford? If we don't have an application, I don't really know, but I can give you the numbers of, if you bought at this purchase price, this is what your rate would be. This is how much money you have to have. And we're going to outline in there, these are the items that you will see in Box A. It's funny, I'm below camera. I say, these are the items that you will see in Box A in the loan estimate. So when I say there's nothing there, these are the items that would be there. If you compare me to another lender, look at those items: a processing fee, an admin fee, an underwriting fee, a doc fee. Anything that goes directly to the lender or the broker goes in Box A, and it goes back to that same conversation. What's my interest rate? How much did I pay for it? Tyler, Tina, how does that compare with what you guys are doing with a borrower that's early in the process, pre-application, and wants to get an idea of what their numbers are going to look like?
I do mortgage coach. So I'll send them out basically the equivalent of a loan estimate in an electronic program. And typically I'll do 2 or 3 different loan scenarios side by side, record a video, and then tell them that these are estimated numbers. And if they want to move forward with the loan, then we'll need a full loan application and all of their initial qualifying documents. You can't get a loan estimate without having your credit pulled, without all of your real stuff, because we want to be in a position, if we offer you that rate, that we can lock and act on that rate. So it's really not in your benefit to go and ask for formal loan estimates without providing a actual loan application, because you're not really in a strong position to be able to act upon that situation.
Perfect. And Tyler, how does that vary, or is that similar to your process?
Similar. I mean, we're not going to, unfortunately, we're not going to take what the client inputs in or for face value that everyone has a 720 credit score and quote a rate that's not available to them. So fee sheets, mortgage coaching, same exact thing. I do a lot of side-by-side comparisons for a couple different parameters. And I do a lot of video explanation as well too. Identify that this is not a loan option, loan quote, that we're going to need a full application, and just very similar, same process. Yeah.
Perfect. We have a couple of really good questions here. They're not necessarily on topic. So if you ask one of those questions, just give us a couple minutes. We're wrapping this conversation up, and I definitely want to get to those questions because these guys will do a great job of answering them for you. Sort of the last thing that I wanted to talk about on this topic in terms of an interest rate, I get the craziness, drives me out of my mind. A borrower will call, they get a quote, and they call me back 4 days later and they say, hey, I got a better number. Sorry, I got to go with them. So when did you get it? Oh, they just gave it to me right now. Well, it just so happens for the last 4 days, rates have got better. As of today, that would be untrue. If someone called 4 days later, my rate would look awesome because we've been going up every day. Tyler, why is it important that if someone wants to shop 2, 3, 4 lenders, that they get their quote on the same day?
Tomorrow will be a good indication as to why it would be a good idea to do on the same day. There's interest rates, especially with today and what's going on in the market and the economy today, they're so volatile. We can see swings of 0.25% to 0.5% within 2-3 hours on the same day. So making sure that what you're quoted on that same day with what you're shopping, it's going to be all the mortgage-backed securities. We're all going to be pricing on the same parameters. Making sure that you are getting the same quotes on the same day. You may go to a different lender 2 days later, and they may have a higher rate than what you were quoted 2 days prior, or they may have a lower rate, but they're charging you what we said, those box A fees, to get you in a lower position. They know their rates are higher. They know rates are increasing. How are we going to get this client acquired, and how are we going to make them interested in what they see on our fee sheet or the interest rate we're talking about, which is another top, going back to making sure you submit a loan application, because if I get a fee sheet and I'm not showing you a loan application, I could quote a full percent lower with a bunch of box A fees and say, hey, here's my rates for today based off of what you're letting me know. And I could be charging you 1 to 2, 1.5 basis points. So making sure you're doing it on the same day is you're giving each lender that you're shopping the most honest, most true opportunity to provide the same rate, the same shopping experience, and you can ideally identify and compare down to its truest form who's going to be providing you the best rate, the best fees, the best options.
Perfect. So I think at this point you guys can see it is important you shop around for a loan. There's definitely a process to it. And it's important that you're dealing with people that want to give you honest and accurate answers. It doesn't come down, I would not ever advise someone to go out, shop 3 or 4 lenders and find the lowest interest rate. I would find the competitive interest rate from the person that I felt was the most engaged with me, understood me the most, and had the most expertise. So I think over the last 53 minutes here, we've done a really good job of walking you through exactly how you can go about doing that. A shortcut on the lending side is you can go out to the Vetted VA map. We have folks just like this that are local to you, or at least to your state, that you can get connected with and give you a place to start that comparison and start that shopping process. So along those lines, why don't we jump in here and answer a couple of the questions? And I think it's funny on our end, we don't see the actual username unless you share it. So here on the first question, it says, what's the lending process for someone who wants to build? And then I believe the same person followed up with, is that the same process for a first-time homeowner as well? So either of you want to jump in and answer what's the lending process for someone who would like to build a home?
Sure. It's actually the same. You're going to start with your same loan approval. You're going to go through the same process. You're also then going to get a quote and start working with a builder. That's kind of, there's VA one-time close loans. So it's just going to kind of depend upon what type of a loan product you best fits you. But that determination always starts with a good solid loan application with a good solid lender, well-versed in the loan program that you're looking at. And then the second question is, would that process be the same for a first-time home buyer? Yes. A technical point I think to make is a first-time home buyer just means someone who hasn't owned a primary residence in the last 3 years. It doesn't mean that you've never owned a home before or anything like that. So you can be a first-time home buyer more than one time. And I think that same process, I think the point that I'd really like to make is in either one of these processes, whether you're trying to weigh out like, hey, is it even feasible for me to build a home, right? Is it even feasible for me to buy a home? The best place to start is with a loan officer that does not care whether we're going to close your loan or not. And the way that I say it to my clients that are a little like, I don't know if I'm there, I just want to test out the waters, I tell them all, I charge the same thing for every loan I do. I'm looking for a 5-star Google review. So whether we close our loan or we don't, I'm here to give you the same advice, to go on the same journey with you, to go down all the way down that thought process, because sometimes it's like going down a decision tree and you don't know one thing until you know the next. And if you really don't start working with someone in earnest, literally holding your hand, the information that you can find on the internet is so vast and so vague and so not specific to your situation that in both of the questions that you're proposing or questioning, whether it's a build or first-time home ownership, start with a lender that's willing to give you their time and to just genuinely try to see if it can work for you.
1,000%. You made a really good point, and it kind of goes back, to what we were talking about earlier. And Tyler had said, you plug in VA loan, Washington, D.C., it's going to bring up a bunch of paid ads. Well, even when you get down to the organic, all of the big box lenders have a marketing department that writes lots of articles and gives very vanilla generic answers to these questions with a call to action to, hey, call and talk to one of our experts who happens to have been in the business for 9 months and went through a 6-week training class. So it's important to consider the source when you're researching that information. So another really good question here. I believe it's Jean Alex Morelius says, I got turned down for debt to income because my rental property hasn't been on my rental for a year. It's not showing on my tax returns. What are my options? I'm in Tennessee. And then the follow-up was, I want to do conventional. So we're not talking about a VA loan. On a conventional loan, what are your guys' thoughts on that? This should not be a problem with it not being on the tax return for a year. So does anyone want to explain why?
Yeah, I mean, so there's tons of different, could have been a lender overlay, could have just been a non-knowledgeable professional you were working with that was just something that they're not used to dealing with or working with. But if you don't have to own that property for the previous year and even have it on your tax returns, you can have it sign leases and showing a closing disclosure, a signed Alt-A settlement statement provided to the lender, and utilize that property as rental income with using 75% of the gross rental income. So there's still ways that you can use that as long as it's not even if it's not on the tax returns. It's just finding out how you're going to be able to use that and what you're going to need to provide documentation wise in order to get that income to qualify. So we wouldn't be able to use full 100%, 75% gross rental income. We would need signed leases, most likely 2 months receipt of income. And then some lenders may request or may ask to see when the property was acquired for verification of it not being on the most recent tax returns.
Sometimes a perfect answer. Sometimes in these forums, I try and dig and say what could possibly else be going on there. It's possible the lender just didn't explain to you very well. Maybe they do understand that you can use 75% of those rents, and maybe you're thinking, hey, I rent it for $2,000 and they're saying my debt to income's too high, when actually they're giving you $1,500 after that 75% factor. So you can circle back with your lender, ask them that, reach out to any one of us, or find someone on the map local to your area and have them take a look at it for you. So Tina and Tyler both got a loan question to ask. So that means Sean answer. So Sean, that means you're up. What is the qualifying credit score and debt to income ratio for a VA loan?
So this is the age-old question, right? So the reality is there's not necessarily a minimum FICO score on a VA loan, and there's not a maximum debt to income ratio, with the exception on, if George will touch on FICO score in a second, but debt to income ratio, the VA loan utilizes a different metric. So lenders can set their own overlays where they have the tolerance for credit risk if they're looking at debt to income ratio, but the guidelines show that they're going to look at a residual income. So the VA is going to take in all of your accounts. They're going to take in a factor for the expense of the home, any dependents, any child care. So your overall expense as a consumer. And then they're going to make sure that you have enough money left over for cell phone, eating, food, the bare necessities, those kind of things. And the VA's established a guideline for that based on region, and based on number of people in the household. So as long as you are within the tolerance, you may meet VA guidelines. You may not meet the lender that you're speaking to, their specific guidelines. Same thing with FICO score. So FICO score is not defined within the VA loan, but an individual lender can impose their own overlay to guidelines. Typically, you'll see these kind of FICO score breaks at 580, 620, are minimums, but that is a set guideline by the credit risk department of that lender, not by the VA specifically. So if there's ever a situation where you've been turned down, denied, or given advice that it's a hard stop, it may be a hard stop for that particular lender that you're speaking to, but not a hard stop for the VA specifically.
And what you just explained, the Vetted VA founder, Christopher Griffith, was in here earlier. He may still be watching, but he pointed out that the VA loan is one of the most flexible loan types, followed up with a caveat that if you know what you're doing. But basically, what you just explained, Sean, is why it's one of the most flexible. There's technically no minimum credit score and technically no maximum DTI. There's a lot of gray in there that requires knowledge, expertise, experience. And for those of you who don't know, for anyone to be here, realtor or lender, Christopher has a pretty intense training and testing program, and that is how you are vetted, to know that you know these guidelines and give accurate answers. So if you reach out to any one of us, you are assured of getting someone who knows how to get you honest and accurate answers from that end. So we did get through and cover the topic very well. We now answered 3 questions, and that left Donald out of the rate and question answering because they were all mortgage related. So back to shopping for a lender, shopping for a mortgage rate. Anything else that you as a realtor, Donald, would like to add and make sure that someone watching here knows that they should be doing in the process to maximize their odds of success?
I just would say it's always best to get a second opinion, and just always make sure that the information you're getting is accurate. And yeah, just make smart choices when you're doing it. It's a big you're making a huge investment, so you want to be guided by the right people and people that know what they're doing, and obviously give you the benefits you're entitled to.
Perfect. Well, again, I consider myself lucky. I get to host every week. So every week I get anywhere from 2 to 4 of you to share your knowledge and expertise, thoroughly go through one of these topics, always get some answers from different angles that I haven't always considered. So hopefully if you're watching, you understand that we have a crew of folks here to help. So whether you go out and shop on your own, whether you check the map, you have the information, you're armed with the facts. If you have any specific questions, we're going to wrap up, so we can't answer them tonight, but go out to the forum. There's always a team on duty, a squad on duty to get your questions answered. So again, Sean, Donald, Tyler, Tina, I appreciate you guys being here. Appreciate you sharing your knowledge and expertise. And we look forward to seeing you guys next week.
Thank you.